And good morning, everyone. Thank you for spending your weekend morning here to learn about investments. I'm Chin Xiang from Lion Global Investors. If you find my name too hard to pronounce, you can just remember me as the ETF guy from Lion Global Investors. So I'm here today to share with all of you about the Lion-OCBC Securities Singapore Low Carbon ETF. So about this ETF, I'd like to say just three key things to remember. First, this ETF, since its inception in 28 April 2022, has cumulatively outperformed the STI. So cumulatively outperformed the STI since inception in 28 April 2022. And this is despite the fact that STI has hit an all-time record high recently. So it has outperformed the STI. Second, this is the top-performing sustainability-linked ETF in the whole of SGX in 2024. So this means actually performance and also sustainability, it can actually happen together. You do not have to sacrifice returns when you invest sustainably. And third is about the fact that this ETF is also the top dividend-paying Singapore equities ETF in the whole of 2024. So this means that while investing sustainably, while gaining geographical and also sector diversification, you also get to enjoy dividends. The latest dividend yield is around 6% as of the 30th of June. I will share more about this later. So these three key points to remember: dividends, performance, and sustainability. And we are part of also OCBC Group, and also one of Southeast Asia's leading asset managers. So today we manage around 72 billion Sing dollars of assets for our clients. And we started our ETF journey back in 2017 when we launched our first ETF, which is the Lion Philippe S-REIT ETF. So this here, you will see how we group our different ETFs together in terms of Singapore, China, and also Asia ex-China. So the S-REIT ETF was our first ETF. Then after that, between the 3 years between 2020 to 2022, we listed 3 ETFs, which is the Hang Seng Tech ETF. Right now, it's the top traded ETF by trading volume on the SGX, and has been so for the past 3 years. During this period, we also listed our China Leaders ETF. This ETF has been the top performing China equities ETF in the whole of 2024. And after our China Leaders ETF, we listed the Singapore Low Carbon ETF, which has won these respective awards from the SGX. And last year was a very eventful year for us for our ETF issuance, where we listed 3 ETFs within 1 year. So the first one we listed was the Japan Active ETF. This ETF is Singapore's first active ETF. Till date, for the past 1 year, it's outperformed Topics, which is its benchmark for the past 1 year. We also listed the APAC Financials Dividend Plus ETF. This ETF, key point to remember, offers 5% per annum quarterly distribution. So we will be announcing our distribution in the next few weeks. And also, we listed the Lion China Merchants Emerging Asia ETF. So in total, we have 8 ETFs. So this makes us the only SGX issuer which has the highest number of ETFs on the SGX. So this will be a picture, a snapshot of our entire ETF journey since 2017, where we scaled the business, until today, where we hit around 1.3 billion Sing dollars, with support from investors like every one of you. So for this specific ETF, which is on the Singapore Low Carbon ETF, these are the key awards we have won over the years. So in 2023, we were best performing for Singapore equities. 2024, we are the best performing in terms of sustainability-linked ETF, and also top dividend paying, and also in terms of dividends, we pay around 6% as of the 30th of June. So our ETFs are also among the top 10 ETFs held by retail investors. You will notice that 2 of the 10 includes our S-REIT ETF and Hang Seng Tech ETF. We zoom into the SRS segment, you will notice that our Hang Seng Tech and S-REIT and also China Leaders ETF are also within the SRS investors. So I'll pause here because there's something important. As I speak along the way, I also want to share that I'll be also giving out limited edition prizes branded with the Singapore Low Carbon ETF logo. So this could be something that could be interesting. As and when I think of some price giveaway questions, I might ask them. So probably good to place and also take careful attention about when I pause or when I speak on or reinforce certain words. So among our ETFs, among the top 10 also by trading volume, our ETFs are also within the top 10 in terms of trading volume for the whole of SGX. So today I'm here to share with all of you, after talking about LGI, about why Singapore and also why the Singapore Low Carbon ETF. So first question I will ask before I even talk about different things about the why Singapore. Very, very simple question. My colleague will be starting to give some prizes. Who is this gentleman here? Fastest finger first. I forgot his title. What is Lawrence Wong's title? Yes, you won a prize. A limited edition USB hub branded with the Singapore ETF logo, low carbon ETF logo. So when Prime Minister Lawrence Wong himself was still DPM, he already mentioned that his vision for Singapore in terms of sustainability. He mentioned that although net zero by 2050 is a stretch target for Singapore, Singapore will press ahead with this ambitious goal. And Singapore actually only accounts for like 0.1% of global carbon emissions. But we want to do our part to tackle this global issue of climate change. So this makes Singapore not just actually a little red dot. We are also a little green dot. And it's what makes us different. And now PM Wong, when he's now also has moved up to become Prime Minister, all these visions and also talks about sustainability are constantly and consistently being reinforced. So for example, right, in the earlier part of this year, Singapore already committed to reduce its greenhouse gas emissions to around 45 million tons by 2035 within the next 10 years. And we target to reach net zero by 2050, which means around the next 25 years. So specifically, right, within EDB, which is one of the parties and government agencies that will implement and reinforce this, they mentioned that sustainability concerns will reinforce and also shape Singapore's priorities to attract investments. So it's a full government agenda to be able to draw sustainable investments and also help investors invest sustainably. So this is the entire 4G leadership in terms of the entire vision to help push Singapore towards sustainability. And the purpose of, and also the rationale of having a Singapore low carbon ETF will be able to help investors and guide investors towards shaping their investment portfolio towards this vision. So by right, I wanted to actually play a video. So this actually happened around 2 years ago, where we actually had a sustainability event to plant trees as part of the national movement. And these crew here actually included people from SGX, OCBC, Securities, and also Lion Global Investors, where 4 organizations actually came together to plant trees to show our movement towards sustainability. So I think I wanted to mention that actually because of this, we walk the talk, by which is what our government has been pushing for sustainability. But due to shortage of time, I will skip this video. So I will focus now on the Singapore Low Carbon ETF. So for the Singapore Low Carbon ETF, I mentioned earlier, the key aspect, it has won 4 awards. Key aspect, cumulatively outperformed STI since its inception in 28 April 2022. So STI has hit record high, all-time high. We have actually also hit all-time high in terms of our ETF share price. It's just that it's less marketed, less noticeable by investors. But this has been a phenomenon that has also happened. So until now, till date, for the past 3 years since our listing, we have achieved around 11% return every single year since 2022. And we also provide greater sector diversification. So for the STI, a lot of it is focused on financials. You will notice by the orange bar is more than 50% towards our financials. But for our low carbon index, it's more around 30% in terms of financials and more evenly distributed. You will notice some allocation towards technology, towards real estate, and all these, which could benefit when there are interest rate cuts. So all these come into play and also help to potentially drive the ETF's potential performance. In terms of breakdown, we also, by country of listing, we also offer greater geographical diversification. So you notice it's roughly around 75% of Singapore-listed equities. We also have around 16% weightage towards US-listed Singapore-domiciled companies. So this includes companies like Sea Limited, Grab Limited, which have actually helped to boost the performance of this ETF, and also Hong Kong-listed constituents of companies domiciled in Singapore. So this is the key difference. We capture Singapore-domiciled companies listed beyond Singapore. So if we look into a breakdown of performance, right? So the top few constituents, top 5 constituents, as you see here, there's Sea Limited and also Singtel Limited. These two actually, in 2025, they have performed better than our 3 local banks. One at 43% in terms of return, the other at 24% in terms of return. So all these demonstrate the benefits of sector diversification and also geographical diversification. And I will cover a bit about the index. So this is also where I will have my next prize giveaway question. Similar gift, the USB hub. Very, very simple question. Maybe this time I take questions from this, I'll take answers from this side. So how many constituents does this index have? Yeah, this gentleman. Yes, 40 constituents. And these are 40 Singapore domiciled companies. They include REITs and also it's ranked by free float market cap. And at the same time, they also pass a lot of criteria in terms of carbon intensity. Carbon intensity basically means the amount of CO2 and greenhouse emissions per $1 million of revenue. So with all these, actually, how we structure and construct this index is actually possible to achieve good returns while at the same time still outperform older indices, more traditional indices, such as the STI. So as a result, what you get after all the different liquidity screens and also the different carbon intensity screens, what you get is a portfolio of 40 Singapore companies that help investors achieve a lower carbon footprint. So we also recently upgraded and enhanced the index in the 21st of March this year. So initially it was 50. We created a more enhanced index to help focus on lower number of companies, keep it at 40, but at the same time it's still more than STI's 30 constituents. And at the same time, we added more carbon emission criteria. So for example, we now include scope 3 emissions. Scope 3 emissions are indirect carbon emissions to make it tighten and also in line with, more in line with global carbon indices. We also, in terms of the weighting tilt, include scope 1, scope 2, and scope 3 carbon emissions inside. So all these help to enhance the index while at the same time still deliver similar performance where we still outperform the STI. And in terms of the index overview, you see very clearly, this is the chart to look at. STI in terms of the carbon emissions and also in terms of MSCI Singapore, we are around 5 to 10 times lower in terms of carbon emissions. But at the same time, we still outperform STI. So, which has recently delivered a record high. So all these demonstrate it's still possible to achieve both returns, dividends, and also diversification in terms of sector, in terms of geography. These are the top 20 holdings. You'll notice that actually our 3 local banks are still inside. They are among the top few holdings of the ETF. But at the same time, you have the growth-oriented companies, for example, like Sea Limited, Singtel recently went through an amazing turnaround. So the share price has gone up quite significantly this year, more than 20%. I think in my previous slide I mentioned 23%, which was the actual figure. And at the same time, we have a lot of other different companies that still give and drive the dividend yields. So the latest dividend yield for this ETF is at around 6.0%. We might be announcing a special distribution in the next few months. So we are going to announce our semi-annual distribution, but we might announce another special distribution. So talking about this special distribution, actually last year we had a special distribution in September, and after that we paid it in early October of 3 cents per unit. So this is how we help investors lock in capital gains, and something we will continue developing to build our track record for this ETF, and at the same time build a positive investment experience for our investors. So I'll talk about 2 constituents within this ETF. Basically, the first one I'll talk about, the first one starts with S. This time I will have a prize giveaway question for the crowd here. Does anyone want to guess what constituent I will talk about? It starts with S. Yeah, C limit. So to this lady and this gentleman, because you mentioned C at the same time, so you get prizes each. I'll talk about C Limited first. So for C Limited, is a growth-oriented company. It has achieved double-digit growth for all its 3 businesses, Shopee, Garena, and also C-Money side, and achieved record earnings in the past few quarters. So it's an amazing company. So for Shopee, in terms of gross merchandise value, which is all the merchandise that are sold on the platform, achieved a new record high in Q1. Then for the C-Money side, which is under digital financial services, the loan books have grown 75% year on year. So how many companies can actually, or even banks, can actually grow their loan book by 75%? So this is actually a highly growth-oriented company. There are a lot of different room for capital appreciation, but at the same time, it's actually part of a much larger group. It's a part of an integrated ecosystem. So there's actually a lot of growth potential being priced in, while at the same time, there are cash cows, for example, like Garena giving all the free cash flow to help fund the business expansions in the other different units. So because of this, that's why analysts also gave an average target price for C Limited at around $194. So C Limited last year, they grew share price by more than 90%. This year, they really grew by 40%. So we believe this is a good constituent within the portfolio that could deliver higher capital appreciation. Okay, oops, I wanted to ask my next prize giveaway question. So this time is for the center of the crowd. My next prize giveaway question is, the next constituent I'll talk about is T. So for the crowd here, anyone wants to make a guess? What's the constituent I'll talk about? Well, I haven't even say 1, 2, 3, you really raise your hand. I will say 1, 2, 3 again. Okay, so 1, 2, and 3. Do this, but yep, Trip, yep. So it's Trip.com, which I will cover next. It's an interesting company and actually also a newly included constituent of the index. So this index constituent, Trip.com, they recently actually re-domiciled their headquarters actually to Singapore. So that's why it's actually a Singapore domiciled company that is actually included within the index. So in terms of revenue growth, it has achieved 16% in terms of year-on-year growth. This is actually much faster than a lot of different companies. In terms of strategic expansion, they have grown travel bookings by 60% year-on-year. So I believe this is, in the longer term, a great constituent, which can actually achieve a average target price of around 584.25. So over the years, it went through some volatility. At the same time, after that, it's now on an upward trend because of all the different positive news releases. So in summary, 3 key things to remember about this ETF. Covers the 40 largest Singapore companies by free float market cap. It has outperformed the STI, since its inception in 28 April 2022, is the top dividend-paying Singapore equities ETF on the SGX in 2024. And the ticker is very easy to remember, and this will happen to be my final prize giveaway question. So I open it to all of you. What is the Sing dollar ticker of this ETF? So to this gentleman with the white cap. Yes, thank you. Thank you. ESG. This is what this ETF is about, providing this ESG solution for everyone here to be able to invest sustainably, while at the same time gain exposure to performance, to diversification, and also to strong dividends. We hope you remember ESG and start buying ESG on the FSM platform. Thank you.